your pick for us last quarter, it was Oracle. It fell about 30% over that time due to concerns around the AI build-out. But you have a new pick for us for this quarter. Happy New Year. Good to see you. Let's get to your pick.
Yeah, thanks, Frank. And I would just say that we added to Oracle, so we're not running away from the name. It was disappointing timing. It's an epic UGG that I gave that name in the fourth quarter. But our name for the first quarter is Amazon. And there's a whole host of reasons we like it, not the least of which was the epic beat from last quarter, earnings up 25%, revenues up 13%. And then you had AWS growing at the fastest rate since 2022. And what caught my attention was when Andy Jassy said October sales volume for AWS was bigger than all of the third quarter. So from a tech name standpoint, we love it. And then the consumer, we think, is going to have a tailwind in Q1, and that's going to benefit Amazon sales. And so we like it as kind of a consumer discretionary name as well.
All right. So I want to pull on that thread because the cloud business is obviously very strong. It's the global leader. A lot of business is going to go to the cloud as we continue to see AI and the use of AI and the AI build out. But I want to go back to the consumer. That's a very interesting point. We saw a very strong holiday season. Adobe put out some numbers. But one of the things that really caught my attention is that buy now, pay later got up to $20 billion this holiday season. That's a very big number. I think total spending was about $250 billion, something in that neighborhood. Are you concerned about the consumer going forward? We're also going to get some reads on the job market, obviously, this week. ADP later today, the jobs report coming up later.
Yeah, so what's interesting, Frank, is that while jobs are kind of flatlining in terms of growth, you're seeing new business applications skyrocket last quarter. And then you've got the tailwinds from the One Big Beautiful Bill Act. So you're going to see major tax refunds, $150 billion are the estimates above last year. And then we may see some checks from this administration going out. So I think if you step back and say, when were the benefits of the One Big Beautiful Bill Act going to take place? It's retroactive to last year, but we don't see the benefits until the first quarter of this year. So I think the consumer will continue to spend. Debt servicing as a percentage of disposable income is not out of line. So I think we'll continue to see a resurgence in spending in Q1.
All right. One other thing that you were actually bullish about, which I thought was pretty interesting, is that Amazon's pledged to spend about $4 billion to expand rural delivery. Now, I've talked to a lot of people about this. It's very hard to make money on rural delivery just simply because the homes or the mailboxes, whichever one you're going to, they're really far apart. But you're bullish on this. Where do you see the upside in this? Because it's a very expensive proposition. And I think most people realize that Amazon's hands almost been forced due to its quote-unquote glide down from UBS and some other carriers saying, we don't want to take your low-margin volume.
Yeah, I mean, I think what Amazon has is, a behemoth club to wield, if you will. So they can afford to see some squeeze in margins as they expand other areas of their business. But this is a necessity for them to keep up. And so if you look at where they're seeing the growth, it's AWS, of course, but also advertising, which hit record levels. I think it was 17, almost 18 billion in revenues last quarter. And that's all driven by their AI focus, but also Rufus, the new shopping agent, which is still in beta, is driving all growth in gross merchandise value as well as advertising growth. And we expect to see that accelerate. So I agree with you. It's not the sexiest part of their business, but it certainly is an area where they can compete and at least continue to drive sales.
All right. So I was asking about some of the things that could be potential issues for the company also, but I want to talk to you about what you see as maybe not even priced into this company. The chip business, you mentioned advertising, which is something that I don't think most people think about when it comes to Amazon. Is there anything that you don't think is priced in that could be a big tailwind?
Yeah, well, I mean, I think the Trainium chip is oversubscribed, and it's growing at about 150% quarter over quarter last quarter. You've got Andy Jassy saying as soon as we put up capacity, it's fully subscribed on the cloud. So I think those are things that are being underestimated. And if you look at the valuation, I never thought I would say this about Amazon, but on a relative price to sales ratio, it's in our buy range. Price to cash flow, it's cheap. On a price earnings to growth rate for 2027, it's trading at 1 times next year's earnings growth. So those are pretty compelling valuations for a company that's growing somewhere between, revenues around 10 to 13% per guidance for Q4, and then earnings growth that's in the low 20% range. So we think the name's underestimated. Andy Jassy got Tim cooked when he took over. And I think he's underestimated as a CEO. We like great franchises with excellent quarterbacks.